We have a great question here from Garba, who asks how they can weigh which instruments are the strongest or the weakest when we have a strong risk on or a risk of sentiment. Basically, are there times when one of them will be weaker and one will be stronger than the other, and how can we gauge that? So, thanks for the question. I think it allows us to address two important nuances with risk sentiment that will help you to navigate overall risk flows better from day to day. Firstly, we have sentiment, and even though risk sentiment is obviously a form of sentiment, and even though it has certain usual outcomes that one would expect, there might be other drivers at play at any given time that we need to keep in mind. So for example, even though a risk on sentiment would usually see your high beta currencies appreciate across the board, there might be other catalysts or sentiment shifts at play, which might mean one of them are stronger than the others at that time. So basically getting an additional lift. Or it might mean that even though they are supposed to be strong, they might be trading a little bit weaker due to those catalysts. The second nuance to keep in mind about risk sentiment is that it's just a guide. So even though one would usually expect certain risk sentiment outcomes, it might not always play out that way. Sometimes the market just doesn't move in line with the common correlations, and oftentimes when that happens, it might mean there is an opportunity to buy or sell something at a much better or attractive level. But at other times, it might just mean that the markets aren't really moved by those particular risk drivers. So in today's session, I think we have a great example of both of them, because even though we've had a supported risk zone throughout the session, one would usually expect your Aussie dollar, your Canadian dollar, and your Kiwi dollar to be supported across the board due to a strong risk on move. Now, in today's session, the Kiwi dollar is one of our strongest currencies on the board, currently the leader of the major pack. But it's not only supported by risk flows right now, but more by the earlier comments. Let me just quickly open those up. Actually, it's actually more supported by the comments that we had coming out from PM Arden. So if we just open up our daily news here, we can see that, let me just scroll down. We saw that PM Arden extended level 2 virus restrictions in Auckland, but for the rest of the country, they will move to level 1 restrictions on midnight, September 21st. So that was another positive factor that has really seen a lot of strength coming into the Kiwi dollar. So apart from the risk on turn, we would expect the Kiwi dollar to basically outperform the Aussie and the CAD without any other catalyst supporting or additional catalyst supporting the Aussie and the CAD as well. Now, in today's session, if we look at the grid, we can actually see that despite these strong risk flows, we're actually seeing the Aussie and the CAD, apart from the dollar, of course, being the leaders to the downside of the pack today. Now, for CAD, we can argue and say that, okay, it might be due to oil prices. But I would have to argue that oil prices, the correlation between the CAD and oil prices, isn't something that will ever go away, I think. But recently, it has had a lesser impact on the Canadian dollar. I'm not sure what the actual reasons are for that, but we haven't seen that very strong sensitive correlation recently. So let's say it is oil prices that's weighing on the CAD today. That can explain why it's not supported. But if we compare that to something like the Aussie, there's not really anything right now. We would expect the Aussie to move higher just based on equities moving higher. But that has just not been the case today. It's actually been struggling all day. As we said, it's currently leading the pack to the downside. And I expect that it's not really driven by anything specific at this moment, especially by something that we can really meaningful latch onto. We do have some upcoming employment data for the Aussie later this week, where markets are expecting a lower print in jobs as well as a higher print in unemployment. And I expect that could be weighing on the Aussie to some extent. But apart from that, I'm not really seeing any solid reasons for the Aussie dollar not moving higher with the current risk flows that we're seeing. So I think today is a very good example of both these two nuances and risk, which firstly is that there might be other sentiment factors at play, which might be giving something an additional boost or additional downside, regardless of the type of risk sentiment that we have. So with the Kiwi, it's strengthening not only as one would expect from a risk flow, but also from those comments from PM Arden. And then secondly, that sometimes the market just doesn't really respect the correlations for whatever reasons that might be. Obviously, we always try and find reasons for why those correlations aren't working. Why wouldn't the CAD strengthen today? Why wouldn't the Aussie strengthen today? And as we said, the reasons given so far, for me, it's very light. Not really seeing that as having such a big impact on these two right now. So it might just be the market not really respecting the normal way that risk on sentiment would affect the market. So I hope that helps with the question. Any other ones, as usual, please don't hesitate to let us know.